Very good morning to everyone, and welcome to this exciting panel discussion on building the bank of tomorrow here at Sibos 2024. Today, we will be diving into some of the most pivotal topics shaping the future of banking, ranging from the role of transaction banking, partnership with fintechs, and also the broader implication of technology and climate transition. Together, we will explore how banks are adapting to a rapidly evolving landscape and what steps needed to build the resilient, innovative banks of the future. First, let me welcome the incredible set of panelists who will join us today. We have first Ashish Bajaj, who is the Global Head of Financial Institutions at Citi. Ashish is a Citi professional based in New York and have managed Citi's institution business and have broad experiences with Citi across many geographies, including India, London, Hong Kong, and the US. We also have Erika Kostelik, Head of Transaction Banking at ABN AMRO. And Erika manages all client groups across transaction banking, including payments, cards, savings, trades, liquidity management, insurance, and open banking solutions. She's also the member of Supervisory Board of Geldmaat, the company responsible for all cash machines in the Netherlands, and also a board member of Dutch Payments Association. We have Manish Kohli, who is the Global Payment Solutions Head at HSBC. Manish leads HSBC Global Payment Solution, delivering comprehensive offering in payments, liquidity, FX, and commercial cards to support clients' global growth. He has over 2 decades of experience in senior roles across global transaction banking out of Mumbai, London, and New York. And finally, we have Soleme Badi, the CEO of Comgo. And Comgo is a fintech company headquartered in Switzerland, providing trade automation services to banks and their corporate clients. And I'll be your moderator today. My name is Ernest Saujana. I'm the managing partner for BCG in Southeast Asia. I'm going to dive right into our conversation today, maybe starting with you, Ashish. After the financial crisis, what do you think are the role of transaction banks in adapting to the new financial landscape and building the bank of the future?
Thank you. Thank you, Ernest, and thank you, everyone. Very great pleasure to be here with such an esteemed panel. I think it makes sense to first step back and say, what is a transaction bank? What does it do? In our views, in my view, a transaction bank traditionally has and will continue to empower the real economy and the financial economy. Traditionally, transaction banks have been focused on scale, reach, processing capacity, basically resilience. That's what we've been focused on to build, to provide corporate treasuries, liquidity, payments, working capital. However, in our view, the future of transaction bank will move from supporting the global economy to empowering the global economy and global commerce. And for that, the transaction bank of the future will do all of the above, but will basically be 24/7 payments and collections, 24/7 liquidity to support that flow, 24/7 working capital. That is a transformational change which all transaction banks have to really think about, because that's how commerce will get done. That's how commerce will get enabled. And what's driving that change? Driving that change is really the consumer need, the consumer-like expectations, businesses wanting that, the growth of fintech, which is really causing us to rethink the art of the possible, technology, and the disruptive technology which is available. All that is actually allowing transaction banks to think bolder about the future and what the future can look like and shape it. The good news for transaction banks in general is it's a very highly accretive business. And hence, for all what I just said, you need a lot of investments, a lot of technology investments. I know Ernest is going to ask us a question later on that. But fundamentally, I would leave you with one thought and then hand it over to my colleague, is the transaction banks have always empowered and powered the global commerce, but now it's in the position to actually enable global commerce.
Manish, you would like to add to that? And I think Ashish mentioned a point as well that it's important and also in diversification of revenue for banks. How do you see that happening from your experience?
Sure. Ernest, first, extremely grateful to be here and with this esteemed set of panelists. Ashish touched upon the importance of transaction banks and the evolution. I fully agree. I think, that you started off with a question about global financial crisis and, how that has kind of shaped the transaction banking industry. Let me pick that up and I'll lead into the valuation point. I think many of us in this room who were ever around when the global financial crisis happened, who were dialing customers to kind of give them reassurances banks are going to be around and this is not the end of banking, would remember this very clearly. Is that what started off as a large credit event very soon became an event where the focus was on financial resilience, stability, and the fact that, to Ashish's point, which is, whatever happens, the music shouldn't stop, payments should continue to happen in the world, liquidity should still be there. And I think, like, when I reflect back in moments of transaction banking's entire history, I think the global financial crisis was the pivotal moment when the whole world, the regulators, the corporate clients realized the significance and the importance of that. And that followed in, whether we like it or not, some regulations around LCR, net stable funding ratios, and lots of other things like that, which, however painful may have appeared to be at that point of time, were actually fundamentally so important for the transaction banking industry. And we saw that when we, in 2020, had another crisis that not many of us want to remember, but the biggest health crisis in our generation around COVID. At that point of time, we had lots of things to worry about, but we didn't have a reason to worry about are payments still going to happen or not, are banks still going to be liquid or not. And I trace this back to the changes that happened after the global financial crisis in terms of, totally changing the industry. So I think that's maybe what my reflection on the global financial crisis, the boon that came out of this complexity. The second point is about valuations and how that happens. And I think there's an increasing set of understanding in the industry that transaction banking is very accretive to bank valuation. And the answer to that, the reason why that happens is very simple. If you look at all of banking and look at the most frequent touch point that is there with a customer, it is not the 3 loans that you do in a year or that one M&A transaction you do once in 4 years. It is the hundreds of payments that you do every second for a client that leaves a remarkable mark on not just letting the customers and their business survive, but also the experiences that we build and we deliver for them, as well as the enabling of growth, the enabling of risk mitigation, and so on. So across my peer group, and whenever we have a conversation about the value of transaction banking, it is considered to be the most accretive ROTE business from return on tangible equity. It's the most accretive business from an annuity perspective. And again, to Ashish's point, I say, I think the realization is there that to do that, the industry needs to change, the infrastructure needs to change, and banks need to invest a considerable amount of money to kind of achieve that potential.
Great. So, Erica, I'm going to go to you now. I think everybody seems to be in alignment that transaction banking is really accretive opportunities for the financial sector. So, given that, how are banks really implementing this strategy, and how are you adapting your opportunities and business model to capture some of these emerging opportunities?
So first of all, also good to be here. I think what we're implementing is, of course, adjusting to the new technology we have. For example, how can we use AI models? What we're doing in our organization is we're also using the wisdom of the crowd to think of how we can use that, what the opportunities are, and to really see how we can scale that and quickly pilot and then explore that. I think also that was mentioned already on the pivotal role that transaction banking has for customers, both retail customers but also corporate customers to participate in society. So I think financial inclusion is also a very important one. With the increased digitization, it's also we have to be very, very careful to not leave people behind. So how can we help them in that transition, but also how do we make sure they can still bank? So I think that's a very important one.
Ashish, you like to add what you see in your organization in terms of?
So I just reflecting on what Manish and Erica have said, I think just going back, focusing on transaction banking is such. I think the other point just to add before I talk about how we are thinking about it is really that the available wallet is also increasing. For example, in 10, 15 years back, wallets didn't exist. Today, 49% of total retail e-commerce happens through wallets. That's available. Ride hailing, food ordering, those were handled differently in the non-digitized world. So the point I'm trying to make is that there is a expanding wallet as supply chains to continue to digitize for transaction banks. So answering your question on how I deal with a lot of financial institutions in my role, how Citi and other financial institutions are looking at it, I think you have to play to your strength. And it goes back to, I think, what Manish said, is every bank will have their own client segment, their own geography, which to focus on. So keeping that at the center is very important. I mean, like if you are a regional bank in one region, expanding to another region is an opportunity, but just not because of the transaction bank. It should mean really important for the whole bank as a whole. So focusing on the segment and geography is very important. Many of us very obviously look at retail, technology, healthcare. These are some segments which are very transactional oriented and also have higher volume. So those are kind of focus areas. And some of those are being digitized and are looking at different ways to engage with the customers. So that's obviously another piece which is important. The last thing I would add there is that many banks, not only the bank which I come from, are already started on this journey to be available for customers and ecosystems whenever they want it. So, for example, there's a fair amount of digital smart token related stuff. There is for example, in the shipping industry, issuing guarantees to canal authorities at the time. What does that do? Yes, it's a smart token. That's a nice thing to talk about. But at the end of the day, it's helped just in time use a balance sheet, right? Allowing 24/7 payments in 365 days. Building systems which are 99.9999% available for e-commerce transactions and hooking them on. So these are some examples, Ernest, which lots of banks are doing, including the institution which I come from. But it really centers around what are the geography segments you want to win. The fact that there is more for all of us to actually garner in terms of deposits and in terms of transactions is there as the economy digitizes. But in my mind, the underlying thing is for transaction banks is really looking forward in terms of what is going to be required to compete, to get those clients to bank with you, get those transactions through you, get the right amount of client experience. And one thing which we haven't mentioned yet now is get your risk management in place. Risk management, in my view, is going to be much more enhanced, partly to do things which Manish has already spoken about, but it's going to be much more enhanced in a more borderless commerce world. So hopefully that adds some context.
Thank you. Soleim, I'm gonna go to you now. Actually, one of our study that we launched earlier this year suggests that if you look from a value creation perspective, non-banks so including fintechs, payments companies, FI tech providers, are expected to contribute 50% of market capitalization in financial sector by 2030. So how do you see these non-bank companies evolving, and where are the biggest opportunities for partnership and collaboration with the traditional banking sector?
Thank you. Nice meeting you all. Many things. I mean, banks are having a wider role and want to be much more supporting and proactive and global with their clients. And the question is, how do you get there, right? Because what has not been mentioned is obviously the weight of regulation, the increasing, and it's really, we see it every day, the increasing complexity of doing business, especially when you are a global firm. The increasing complexity of managing legacy system with innovative technologies, and the willingness to do more with your clients. So I think the fintech companies and the outside companies can be seen as a way, as an enabler for banks to provide more services to their clients at a faster pace than if they would do it themselves. I think everybody's quite convinced about that. The question is, how do you get there? How as a big institution can you engage with a tech company, a fintech company, when you're completely swamped with regulatory requirements, legacy systems upgrade? So it's this engagement model is crucial in the thought process of the banks. And to answer to your point, it can come under various ways. I mean, some banks invest in tech companies. Some banks do strong partnerships with tech companies. So you have many ways to do it. But if you don't think this engagement model, you won't be able to get the proper upside from working with an external partner. And we see a lot of banks trying to do it and really struggling with this journey because they haven't thought this engagement model. But the banks who succeed in doing it really can scale their business, can bring more services to their clients. And it's true that working with an external partner that is not as heavily regulated, that is not swamped with legacy topics, is a big enabler on how to get there for banks. And this is one of the main reasons explaining the statement you made through those studies.
Can I add something?
Yes.
One of the things working with fintechs, which I've recognized, is apart from it from being the right thing to do, things which succeed, and you can add to that, is when the bank is very clear on the use case and on the complementary nature of the partnership. And that really helps it going, because you're absolutely right. Banks in general and regional and global banks have more complexity. Getting through any of these partnerships is not an easy thing to do. So getting that use case right and getting clarity, I don't know, in your experience, that's what I would submit.
Yeah.
Yeah.
So,
Erica?
yeah, I think there are various angles to it. So, because we've been talking about these ecosystem plays, I think for a long time also at Sibos, but you really need to look at absolutely the use case, also whether you have the same goals as partners.
Correct.
Because if you have different goals, in the end, it's not going to work because you're going to get conflicting interests. And I think it's very important that you both have benefit of that partnership. So you know, if you're able to share data, serve the clients together. And I think it also depends on what kind of partnership you look for. Because if we as banks are, have a link to whatever the partner in what shape or form is doing, in the end, also the regulators in a heavily regulated environment, if the partner is not, perhaps missing certain regulations or not as strict, then they will call upon us banks to say, well, you refer your customers to this company, you solve it. So it's a complex situation. And I think if it's about outsourcing, for example, real outsourcing type of models, there's a lot of risk management around that, and also a big dependency. So sometimes it's also, do you want to outsource or you want to do it yourself? Because then you certainly know that these high uptimes we need to deliver, you can guarantee those. So there's a lot of angles around those.
Yeah. Manish?
Yeah, and as that say, I think Suleiman's point was actually spot on, which is like banks are preoccupied with the regulation and the demands that are there. And actually, I see this as a big tailwind towards fintech and bank collaboration because we still have to solve for needs of our clients. The world is changing very rapidly, and fintechs is a way to kind of accelerate your go-to-market to new solutions. And the banks still, while preserving and retaining the need for using their resources for some mandatory work that needs to happen. From our approach, we look at the engagement of fintechs in, I would say, three large categories. One is, fintechs as a way to enhance the proposition, including access to embedded finance flows. Fintechs as a client, which is I think Ashish was touching upon, because frankly, fintechs have been fantastic in being aggregators of flows in the economy, specifically as economies become formalized and cash gets moved out. And finally, we feel like if there's a strategic fitment, then we want to invest in fintechs, and that's increasingly a big portion of our book as we are putting capital towards building larger bonds. But when Erica was speaking, I was just smiling and I was thinking, I said, what we are all talking about is such an evolution. I remember being in a panel not more than like 5 years ago, and I was with somebody who was represented a fintech company. It was all about like who owns the customer, and it was like, I always remember rolling up my eyes and saying, if you're in financial services, nobody owns the customer owns you. And any other thought process is an exercise in vanity. And I just feel so happy now that you just don't hear that language at all. It's all about like, what can we do in terms of accelerating, getting to market faster.
Fantastic. We have all made the right progress, it seems. I think this word has been mentioned by all of you, I think, to some extent for a while, technology, right? And I think this is a really critical enabler for Bank of the Future. If you look at the bank spends on technology, it's increasing, but what would argue majority of them are actually in the kind of run the bank instead of transformative digital transformation. Where do you think is the headwind, and how are you thinking about this, right? And how do we make sure that the true transformative changes can continue to happen? Maybe I'll start with Ashish. How do you see it?
We could be spending the next 2 hours discussing that here, but you're spot on, right? I think, and I think the panelists have already touched on it. The way that we think about it is that this is not a sprint; it's a marathon. In transaction banks, create platforms, create environments for processing not one M&A transaction, but processing millions of transactions or trillions of transactions. So for us, it's more of a marathon which we have to do. And the second thing, which I think Manish spoke about, is that within our banks, we have to position this as which it is, a highly accretive, medium-term, through the cycle business. Once you do that, you'll be able to get the right investments in a longer term period. Now, how do we prioritize? Regulatory, mandatory, all of us know you have to do. What is left? What we've been focused on, apart from adding a few innovations here and there, is really get the client experience right. Get your architecture to the end state architecture, if there is something called end state architecture. Get your manual processes out of the way. The foundation has to be very strong on which you build. I'll stop there.
Yeah, I recognize what you're saying because indeed there's regulatory delivery, there's market infrastructure, and
Correct.
It keeps on coming and coming. And you have to follow if you want to continue to serve your customers, which in essence, in payments, as was said earlier, if our clients aren't able to pay anymore, it's a sudden death for your company, but it's also very disturbing for society at large. So you have to do that, but while do that, leave legacy, decommission stuff, move to the new setup, and indeed have a vision on how you want to serve your customers so you can, while changing and while adapting to regulation and infrastructure requirements, move to that. Indeed, future state architecture will be moving dots on the horizon, right? Yeah.
Yeah.
Yeah, so Ernest, I think let me start with the starting point over here, which is if anybody's in a bank and they've had at least 10 years of history, which is not a new bank, then there's a very big chance that a lot of your technology is already archaic because the half-life of technology now is, I'd say, 5 years or so. And I think if you look at transaction banks, like the starting position again is that as the industry has changed, so as the infrastructure needed to change, the industry has changed. Transaction banks technology has not been built for real time. It's built for batch environments. It's not been built for chatty API experience. It's been built for store and forward. It's not been built for micropayments doing hundreds of transactions a second. It's been built for high value, low volume traffic, blah, 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 blah. And you can go on and on and on. So I think the starting point is that even leaving the mandatory and the reg piece outside of this, just to support our customers, our tech stack, if you've been a bank for around 10 years, is not really fit for purpose for the demands of specifically the digital economy. And if you're on a bank in, let's say, X countries, you just take the same problem, multiply that by X, because that is how the problem gets manifested. But now, having left that problem statement aside, I think if your question is how we are all dealing with this, it is about it's finding the balance. None of us have the luxury to say, I'm going to keep our customer requirements to the side and I'm going to spend the next 5 years transforming the technology. Because like I said, 5 years when you transform the technology is archaic in any case. So it's about how do you build business models and how do you build tech stacks that have a future state architecture, we call it FSA, future state architecture. But everything that you do to deliver to a client requirement today, you do it with the discipline of being accretive towards that future state architecture. And I know what I said in a single statement is so easy to say, it is so difficult to implement, and that's why we have some of the best, brightest people just focusing on it, and millions of dollars that we put every year, just kind of making sure we get that balance right. And I can't say with conviction that we have got it right, but I can say with conviction is that we're all focused, and it's not just our bank, but all banks are focused on getting this right now.
Thank you. So Lema, coming from FinTech view, how would you, any different perspective from your side?
No, nothing very different. I mean, we work with more than 100 banks in this world, so we see them all facing the same challenges today. Those who move faster are those who have a very good execution, on top of what you've said, allocating massive budget, of course, finding the right balance between changing everything but not changing too much. Those who manage to be more agile are those who really have a great execution, who try to keep things simple. And you mentioned you're entering into a marathon, but it's a constant transformation. It's digital is a journey. Bringing more value to your client is an everyday journey and a combination of small steps. And banks who manage to still have good tactical moves within those very large multi-year programs and executing them extremely well are those who can really transform faster than others. But I can tell it's a challenge for all banks, and most of them are testing a lot of ways to be able to do this in a faster pace, including using fintechs, for example, which doesn't make their life easy, by the way.
Perhaps one final thing to add, because the gentlemen on my both sides have large banks, are responsible for large banks, so you have scale. For us, being a smaller bank, I mean, with all
you're not small, Erica.
Then scale. It's a scale game. I think that's a challenge, and it will be a challenge increasingly. So
the only thing is, I don't want the audience to get out that the big banks have less of a problem. We have a bigger problem because we have a bigger geography and bigger legacy to deal with.
Great. I'm going to move out a bit from the technology topic. I think the two big trends that all of us talk about these days in financial sector, one is data-driven business model, and the second one is climate and sustainability, and especially in thinking through climate transition. Maybe I'll start off with you again, Erica, to think how do you think this could be a competitive advantage for you going forward, and where are really the opportunities?
Yeah, let me start with the second part of the question. Yeah, you can call it a competitive advantage. I think it's an obligation we have as a financial industry that we have to focus on helping our clients in the transition to a more sustainable world and a more social world. So I think to use it as a competitive advantage, I don't think we should compete on this. I think this is what we have to do, because everything that's happening in the world somehow needs a bank or a financial institution. So if we can engage into discussions with customers about this, then we can also impact that transition and help them. And in our mission, as we have at ABN AMRO, it's also, we call it just transition. It also means leaving no one behind. So you can exclude or you can engage into discussion to help your customers make that transition. I think that's very important.
Yeah. Suleima, any view from your side, looking at it again from fintech standpoint?
To add to this, I mean, again, fintechs are enablers for global business, are enablers for banks and clients to add more services to their everyday run. Yeah, it's not a question of choice, it's a question of how do we make it happen and how do we make it happen faster today.
Got it.
Honestly, if I can just put another dimension to it, I think as transaction banks, we all need to feel very proud of the role that we play in ESG. And it's kind of like through having ESG specific solutions, which many of us do. But if you just think of the day-to-day focus that all of us have, which is focus on digitization, and I just speaking from my own experience, but I'm sure everybody in this room who's a banker would have similar experience. I mean, through the digital improvements that we have brought into our clients' offices, we would have taken away millions and millions of checks and millions of paper instructions away from our customers. If you just look at that dimension alone and look at the positive it is delivered in terms of reducing carbon footprint, in terms of paper getting in and courier and postal and printed statements, we don't normally put a tag to this, but I think it's phenomenal in terms of the impact that all transaction banks have made in terms of the whole ESG space, in terms of in enhancing the climate. The second point that you talked about data, let me just add my perspective over here. And I think this is probably one of our still underutilized assets that all of us have. If you're a transaction bank at scale, every single second you're doing tens or hundreds of transactions, for your clients. And when you're doing that, the footprints that it leaves as the transactions going through the infrastructure, those data footprints are so robust that there are so many opportunities for us to monetize that for creating either more intelligent routing solutions or better analytics or better predictive capabilities, or the service queries that those generate, and using GenAI to be able to use that to kind of enhance the experience that we give to customers. I still feel that while lots of efforts across the world are there, it still represents a massive opportunity of intermediation and efficiency that we can all introduce.
I would just, I don't want to repeat what everyone has said, and I like your phrase about it's an obligation from a climate and ESG perspective. What I've seen with my company, and I've seen with other banks I interact with, where there has been more progress and more observable progress is when there is a deliberate effort. And a deliberate effort which quite often drives down all the way down from the board. But I completely agree with Manish that we do a lot. The question is, how do we enhance that? How do we talk about it? And how do we encourage the whole ecosystem? But I love your comment. It's an obligation.
And just to add to what you've said on removing paper documents, the legal frame is also evolving massively. We have the MLETR law that has been voted recently. And the legal frame in many countries is converging towards the use of e-documents. There's a huge progress we can do here. I mean, the use is still too little compared to... so even if we've done a lot, there's still a lot of room for improvement onwards.
Great. Also a reminder to the audience that you can post your questions through the Slido tool that is available for everyone. Maybe, quick rapid fire now. I think if you can use 3 words to describe how you envision the bank of the future, what words will come to mind? Maybe Suleima, I start with you.
That's a tough one. I think it's a combination of intuitive, global, and proactive.
I'd say insightful, innovative, and international.
Erica.
Instant, connected, and convenient.
Ah, that's challenging.
They've used all the words.
I actually had three, which was client centricity. Manish talked about data. I think we're just not there yet. There's a lot more in data in general. The tools are a mechanism. And third is, which I feel very passionate about, is, and I'm repeating myself, is empowering global commerce. I think we can empower it, not only support it.
That's 6, Ashish, by the way. I was counting.
Thank you.
So I think all these are, very insightful and also like future looking, right? We want to be innovative, data driven, enabling commerce, and so on. What's the biggest impediment? I think if you can, in 30 seconds of less, like have one or two things you would change to really unlock this to be a reality, what would be those key areas that all of us should work on together? Maybe
Um, I think one has to work a lot about your own culture. What's the mindset of change? Because we're talking about significant change. It sounds simple, but if some of you are in the transaction bank in your banks, it is a significant amount of change. So the culture and the mindset, and if you get that going, and as I said, a medium-term view, those are the one thing. And the other thing is, we tend to blame regulations. I think regulations can be a enabler, and we need to work together on enabling regulations in a safe, reliable, resilient way.
The magic wand, huh?
the magic one,
Yeah,
yes.
so I can dream a little bit. So it would be great if everything was connected and connected easily. So I think today we have a lot of complexity because, we're only adding payment methods and we're not taking away a lot. So I think reducing complexity would be my, if I would use it, I would do that instantly. To make sure that you don't have to adjust and connect all the time and spend so much time on just making sure your operation gets going, but that we can really focus on servicing our customers even better.
Manish?
So, Anis, while thinking of the bank of tomorrow, I think it's important to remind ourselves of the bank of yesterday. The bank of yesterday was a bank that really focused on lending, and when you look at cash management and services like being safeguarding of assets and safeguarding of money or securities and so on and so forth, that was the bank of yesterday. The bank of tomorrow is going to be a bank where we aren't just enabling these basic things, but we are working as enablers of growth, enablers of risk mitigation, enablers of competitive differentiators for our clients. And that's actually, if you see, it's not even the bank of tomorrow. This is what we are doing today. All of us are doing when we're kind of enabling new business models, helping companies become more digital themselves. And if I think about like the bank of the future, I would say those attributes will get strengthened a lot. Now, more directly answering your question, I'd say to do that, in my mind, the biggest impediment that we collectively have is maybe agreeing with Ashish on mindset, but it's like we need to get digitally minded talent that uses the immense possibility of new infrastructure and new technologies that are available today and uses them to creatively solve current and future problems of our clients. So it starts with like changing the mindset, getting the right people, because the art of the possible today is very high in terms of what assets are available to us.
Finally, he agreed with me.
I did.
Salima.
And maybe to add to all that, yes, keeping things simple and collaborating on the right use cases for the industry.
Got it.
I agree.
We have a few questions now from the audience. I think the first one is with regards to what is the role of operations in Bank of the Future?
Yeah.
Any takers?
I'll answer that. Frankly, the way we look at this is operations is so and technology is such an integral part of our bank today and in my business today is that we have to remind ourselves transaction banks are actually delivery banks. That's what we're doing. Every day we're delivering for our customers, and you can't do that without strong operation service and technology. But the most important role that I think operations needs to do is to think of themselves in a self-demising role. We heard this phrase used cheekily, which is technology will eat operations. It is actually done best when operations takes on and like looks at this as probably religion and saying, because there's so much efficiency we can bring to a client experience by operations which is closest towards the service and the delivery experience that we give to customers and embracing new technologies and help in automating and looking at the next generation of our bank's work.
Erica, there's a direct question to you. You are covering insurance in transaction banking. So what is this proposition and how insurance is integrated in with transaction banking?
Well, the way we look at it is it's a daily banking product. So that's why it's part of the focus of our, of our product suite. Is it an integral part? Yeah, I think it's about the daily need of our customers, and of course on the corporate side, you can see a guarantee or a letter of credit also as an insurance. Yep. So, and I think that's an obvious part of transaction banking, right?
Yep. Makes sense. There's a question, I think more broadly also, is having a strong branding important in pushing some of this, changes and capturing the opportunities?
I'll take a shot at it. Branding is obviously, good branding is always good, right? Not good branding is not, but I think it's really about what I have seen in my experience is consistency of what you promise to the client and what you deliver. You promise an uptime, did you deliver on that? Did you promise so it's really about consistency, which means goes back to resiliency, goes back to customer experience. That establishes the brand for you.
Yeah. Great. I think one final question as well. In building the bank of tomorrow digitally, what would be the priority thing that you think banks should focus on over the next 3 years?
Was Eric answering?
No,
okay.
Anyone?
No, I would just say the most important thing is to look at every problem that can be solved and looking at a digital first way of solving the problem. It is very tempting for many of us to look at conventional ways to solve problems, and when we do that, you always miss out the opportunity of some fantastic new technology that is now mainstream. We're big believers in AI ourselves. We're big believers in data sciences. We're big believers in APIs and creative uses of APIs. So my point would be the bank of the future has to be a bank where every problem, every opportunity we look at a digital way of solving the problem. And it goes back also to the point of getting digitally minded talent to be running your businesses.
Perhaps to add to that, I think it's also, as I said in the beginning, about making sure our customers are able to interact digitally. So think about accessibility, think about making it easier for those customers who find it difficult. I think that's also very important. And then, so it's not accommodating in a non-digital way, but accommodate in a digital way, in a way that they can join.
Thank you.
I would just add there that the whole banking wallet for transaction banking is huge. And my recommendation is always to focus on where you can win, build those, success breeds success, and make sure that your value proposition is what you can really deliver consistently.
Great. Well, thank you so much to all the panelists. We are at time. There are still many questions, but I encourage all of you to interact with the panelists even after this session to get more of their insights. Today, we explored many critical elements shaping the future of banking. We talk about the importance of transaction banking and how that's really changing the shape of the banking and also financial sector more broadly. We talk about the importance of collaboration with non-banks in making it happen, and also the role of financial institution in really driving climate transition as an obligation, but also in driving data-driven business models. It's clear that however you look at it, there are many opportunities as well as challenges in making this happen. But what stands out for me today is our shared view of innovation, collaboration, leadership, and the spirit of enabling commerce. And I hope today's insights spark new ideas and strategies for all of us. And with that, thank you very much to all the panelists for your insights. And round of applause for the panelists, please.
Thank you, Ernest.